Good morning friends, I am Gopi Krishna from Glorious AIS Academy. Today I want to discuss with you regarding RBI surplus, how RBI earns its income and how the surplus profits are transferred to Government of India. Before going into the topic, I want to discuss with you a famous psychology experiment, that is marshmallow experiment. So in this experiment, the psychologist calls children and he gives them an offer. One, you can have marshmallow is nothing but a candy, lollipop kind of candy. So you can have, one of the sweet right now, or if you can wait, you can resist your temptation of having that sweet for 15 minutes. You can have two of them. That is the offer psychologist gives, and he actually films how children are reacting to it. Some ate one sweet immediately. Some resisted the temptation using various methods like singing a song, closing their eyes, smelling the sweet. But they made actually cute videos. Basically. After those who waited, they got two sweets, but that's not the interesting part. Later, psychologist, it's a longitudinal study. He studied how their behavior or how their behavior changed, compared to the people who couldn't wait. People who resisted temptation and who couldn't resist temptation. According to the study, he concluded that who could resist temptation, their scholastic achievement test scores improved, their health improved, they were less obese, and their social skills are also very good. So basically the moral of the story is, if you can resist temptation, the success is awaiting you. So as UPSC aspirants also, the choice is yours. Whether you want to resist the temptation of those parties, friends, movies, drinking parties, you gain success later, or you fall in the trap of temptations. So we can learn from this experiment. So resisting temptations is very important for success. But the study is also controversial, and there are some criticisms. Like all psychological studies have criticisms, but let's take a positive message from it, and let's go into the topic today. RBI surplus profits to Government of India. Today it was reported in Hindu. Basically RBI is meeting and they are deciding what should be the surplus, and Government of India is also monitoring that mechanism because they are expecting a huge surplus from RBI. Let's go into the topic and understand it. Last year RBI transferred surplus profit of 2.11 lakh crores in 23-24. That's a huge amount. Prior to that, it used to be 1 lakh crores, 80,000 crores, or somewhere in 30,000 crores also was there. But now the surplus profit is increasing. It is record 2.11 lakhs in 23-24. It's not a small amount. And Government of India is anticipating higher surplus, 2.5 to 3 lakh crores for 24-25. And why this fund is crucial? This fund is crucial to manage fiscal deficit, and our fiscal deficit is to the tune of 4.5. So we can manage fiscal deficit better with the additional fund and increased spending capacity. If we get more fund, government can spend on the welfare programs and reduced borrowings. Usually fiscal deficit is managed, fiscal deficit is nothing but borrowings, and because of the expenditure, high expenditure, be it in revenue side or capital side, we have to borrow. But if we get a surplus fund from RBI, it is basically it can reduce the borrowings and improved liquidity. This fund also can improve banking liquidity. So this fund is very crucial. What is the legal basis for this? If RBI is giving surplus profits to Government of India, obviously there is a legal basis. The legal basis is in section 47 of RBI Act, which clearly mandates that after making provisions for the payment of its staff and depreciation of assets and any bad debts, and also pension fund, superannuation fund for the employees, the surplus of RBI shall be paid to Government of India. It's mandatory because Government of India is the sovereign and this is the central bank, though it has independence, a kind of independence in the monetary policy, but ultimately as per the act the surplus profits shall be transferred to Government of India. And this is the mechanism RBI developed. Today you must have read in the news also, that is Economic Capital Framework. Basically it's a rule book, it's an administrative tool RBI uses to decide how much of the profits constitute surplus. It's not like entire surplus will be given. It will decide based on the by accounting for its financial health and risk management also. So from the perspective of financial health and risk management, because some investments RBI makes, some debts it has, so by managing all that, it will decide how much surplus has to be given to the Government of India. That is called Economic Capital Framework. You also read about Bimal Jalan Committee. It gave a percentage of funds that should be kept and the rest should be given. Bimal Jalan was the former RBI governor. And how RBI earns its income, so that how it is able to generate so much profits and giving it to the Government of India. One is return on its foreign currency, because huge forex reserves will be there with RBI, more than $600 billion. So it's not like RBI keeps it totally in the form of dollars only, but it will be invested in bonds, treasury bills and deposit with other central banks. So some investment is done so that some returns are generated from the forex reserves. But RBI always ensures safety more than the returns, safety and liquidity. These are the two parameters which are very important for the RBI, so that you have to have the enough currency for the imports to happen, and it should be in the liquid form also. Quickly it should be at a moment's notice. RBI should have its money. And interest on its holding of domestic government bonds in the securities. RBI invests in government bonds also. Through that also interest is earned, and interest earned through lending to banks. Banks also take loans from RBI and interest is earned, and this liquidity adjustment facility you are aware of. And profits from the foreign exchange transactions. So actually this is a interesting thing, especially when the rupee value depreciates, RBI interferes and sells the dollars and creates more demand for the rupee, so that rupee value shores up. But because of this, RBI earns profit. Let us see how. Let us say RBI has, just for example's sake, $10 billion. And let's say $1 is 70 rupees, that is 70 billion rupees, just for the example's sake. So $10 billion, 70 billion rupees it has, and let us say from 70 rupees to exchange rate become 80 rupees. Devaluation of rupee has been done, and let us say now government is selling these dollars in the market. So now what it will get is 80 billion rupees. So straight away from 70 billion rupees to 80 billion rupees, 10 billion rupees, profit is happening for the RBI just because of the devaluation. But if the appreciation of the currency happens, then RBI will get loss also in these mechanisms. So it is not like permanent mechanism, but RBI can earn profits through foreign exchange transactions. So this is how RBI earns income. So because of all this phenomena, RBI earns a lot of profit is there, and it will be transferred to Government of India as per legal mechanism, and it can be used for the welfare schemes and also to manage fiscal deficit. Thank you very much, friends. That's it from my side. I'm Gopi Krishna from Glorious IAS Academy. Thank you.